Hey everyone, hope you guys are all doing okay. Let me get out of this. I was what was I doing there? Oh yeah, I was looking for my link for my newsletter. Okay, buddy. Kind of going off of what we talked about during the middle of the day, of course. That Death Cross seems to have a little more power than we thought. We tried to break above that 20-week moving average here, and we still got slammed pretty hard. Even though the majority of the time after breaking it above the 20 moving average here, we tend to move up higher. Even if we come back to retest it, we tend to move up higher here. Break out, move up higher, break out, move up higher, so to speak, right? So I'm not going to really go too much more into what we talked about in the middle of the day. If you guys want some updates, you guys can watch that video. Otherwise, I'll answer any of you guys' questions tonight. I'm probably going to stream for about an hour tonight. I'm a little tired from streaming today, and I have to take Loki out for a walk because I haven't done that yet today. But, well, not since this morning, I guess you would say. But one of the trend lines that I missed here a few earlier today was we talked about this trend line right here that caused that really started all this crashing nonsense that we've been looking at right there. So we talked about it Friday. We knew it was going to drop down below the 50-day moving average, or the 50-day moving average right here. We ran a poll on it, and I believe 60% or so agreed with me that we were going to be coming down here, and unfortunately we did after a little bit of a fake pump here, which happens a lot on ascending triangles. Actually, can I find that last? I wish there was a way for me to keep track of polls on this channel that doesn't, involve me actually having to write it down every single time. Videos. Let me see. 5 days ago. 1 minute. Let's see. This one 4 days ago. Friday. Yeah. Let me see. No, it doesn't keep the poll up. That sucks. Okay. I would have enjoyed if it kept the poll up there. But okay, that's the first trend line that we saw the other day, right? This is the one that kind of signaled, hey, watch out, a big dump is going to be incoming. Because, of course, every time we break down or we break above a moving average, we tend to have longer candles. I know this is what I said earlier, but just in case you guys are watching it, you guys had to work in the middle of the day, right? Longer candle, breaking through the moving average, long candle. Long candle, breaking through the moving average right there. There. All these long candles happen to be because we were breaking above specific moving averages here, okay? Now, the one that I didn't see before, and I'm going to show you guys now, is partly because I don't use body candles, or I don't use the body of candles to draw my trend lines. But one of them right here is if you go from this part right here, January 23rd, all the way over here to this body candle, and you can see we stopped right there. That stopped us. That doesn't mean we're not going to continue crashing down here later on today and have another bad day, right? But this means that we found a little bit of support off of this trend line in particular, and then later on, we might have an opportunity here to bounce, whether it's just for 1 or 2 days or a little bit longer. As far as the moving averages are concerned, we're most likely going to have a death cross now with the 20 and the 50. That's not really going to be a good thing here, but let's see if we can find a way to get around that if we possibly can. All right, let me get rid of some of this stuff over here. Going back over to the weekly, just so you guys know now, if we're looking at this from like a longer term, you guys looking for a longer term swing, we're still waiting to see if we can hold this support right here. This might be the low that we might get to this week, possibly about 37,000, something around there. And then, of course, now that we actually have a new peak here, we also do have a new area that we could add another trend line on for a future breakout. Nothing happening anytime soon, but a future breakout. This might become something important in the future, but for now, we don't really need to use it too much. Okay. And then a couple things here. I'll leave that trend line up on the bottom side here. Two things you guys should know. Let's do this one first. As far as Fibonacci levels are concerned, right there, I sold my shorts that I bought over here. I sold them right there at the Fibonacci level. We've gone down below that. I lost out some profit, but overall, I'm pretty happy with where my short positions, the profits I received from them. And then one more thing here as well. We are still very far away from this longer Fibonacci level, like very, very, very far away here. In case any of you guys ever look at the one from way back here. There we go. This Fibonacci level worked for us in the past, right there, tapped on it. right now, that really is the big level of support. If we do break down from this trend line right here, which may happen in a week or two, if it does happen, that next level of support that you guys really want to be watching for, or if you guys want to play the potential bounce, because usually when we head towards a major level of support, we bounce first. That's a play, but then after we come back down, that's when we usually crash. That bounce point is going to be at $33,250. Now, I'm not saying we're heading down there. I'm just saying right now it's going to be a little bit, more likely than not, we're coming down here, then I guess go back up to 69,000 anytime soon. And then the one last thing here is, normally when we get back down below a 20-week moving average, it is a level of resistance for us, especially when we're down below it. A little bit of resistance here, a little bit of resistance here, here. Resistance, so we broke above and then came down to resistance, right? So that 20 is going to become a new level of resistance that's going to take some effort to get back above. Whales can definitely get us back above there if they want to, but Whales got us this nice little pump right here, and nothing happened after that pump. And in the last 2 years or so, a little over 2 years, almost 2 years, over the last 2 years, pretty much every single time we break above this 20-week moving average, we usually have a nice move up and then come back down. This was the first time in about maybe a year and a half or so where we were not able to stay above that 20-week moving average after breaking out and closing above that particular moving average. Okay. But okay, everybody, let's go back over here to the regular YouTube charts. 1 minute over here. There you go. And we're underneath the Gann level now, and we did close down below that Gann level right there as well. Sometimes it's been a little bit of support for us, a little bit, mostly on the weekly charts, I guess you would say here. But right now it's not looking too good for us. Anything else here? All right. Last thing, we talked about it earlier in the morning here, but let me go back over here to the 15-minute chart. If you go over to the weekly chart here and go back over to the naked one. It's over there. We are currently testing out support on the weekly chart for this Ichimoku cloud. It's been holding pretty steadily all the way since January 31st that week. We kind of got, tied up in here, but support, resistance, support, finally broke out above it, and still it didn't mean anything, right? So we got a lot of technicals where let's go. Then all of a sudden, boom, 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 here we back are at 39,500. Not a good time, right? But we are looking to hold support here on the Ichimoku. If we break down below this, it'll probably end up being something bad again. Because look at this. When's the last time we were actually really below the Ichimoku cloud? Right there. That helped us out a little bit, but that's also because we had some support off of the Fibonacci level, okay? So that level's still there. But last time we were really underneath the Fibonacci level was, off of the Death Cross crash. But before that, what else? Death Cross crash. Yeah, right there, yeah. So let's hope we can kind of get back above this line and hold above that line going in for the next 5-6 days here. That would give us the best opportunity really to not have just a full-blown larger move down in the crypto space. And also we do know that crypto follows the stock market just a little bit more than we would like to these days. So just for you guys' information here, all the major indexes were also down today quite a bit. 1.69 for the S&P, 2% for the NASDAQ, and 1% for the Dow. So it was a market-wide hit today. It was not just on Bitcoin here if you guys like to trade. And let me go back over here to the watch list. NASDAQ first, I guess. I'm going to get the Ichimoku cloud out of here on the NASDAQ. You see how it held right there on the weeklies? But let me get the Ichimoku cloud out of there. Just had a death cross on the weekly chart this past weekend. So be careful of that as far as the NASDAQ's concerned. Death cross on the weekly. We haven't had a death cross on the weekly since, 2018. Even COVID didn't cause us to have a death cross, okay? But I don't think it's going to mean necessarily a crash in the market. I think it's just going to turn a little bit more of a downtrend, okay? Dow, death cross this past weekend right here. S&P, death cross coming soon, but it has not come just yet. All right? And there we go. Okay, that's fine for now. Hey, Cryptomania. Hey, Mike. Do you see bear flag from all the way all-time highs? It's a flag. I wouldn't call it necessarily a bearish flag, but the way everything's been going, you could call it a bearish flag if you wanted to, just because that's the kind of the sentiment at the moment. Mostly what I've been looking for right now is it looks more like a rising wedge in some circumstances. Um, yeah, you can call it a bearish flag if you wanted to, because we've been in it for a while now. We haven't tapped on the first major Fibonacci level, going back to the 2008 Fibonacci levels, the lows from 2008 all the way up to the highs of 69,000 that we experienced last November. That's really those major levels that I'm watching for. And if we do break that Fibonacci level, that's where you might see some things really start to go downhill for Bitcoin and all of the altcoins in the short term or more medium term. But we're still very far away from that level right now. That level is around like 30 something $1,000. So we're at least like $5,000-6,000 away from that. See. Hey Monica, yeah, I can take a quick look at BGB. I think the last time I checked BGB, because I have it right here on my thing. Yeah, it's let me see if I can pull it up in full screen for you. So it did break down here, Monica. So if you wanted to shave some off and buy more just to accumulate more for the long term, that's what I've been doing here. I sold maybe about 25% of my BGB, and I'm looking to buy some a little bit lower. I'm not entirely sure if I'm going to be able to buy some lower because some guy just put down a massive wall of support at 18 cents, and it kind of irks me because I wanted it to come down a little bit more so I could buy more here. But right now we have an ascending triangle that we've broken down below, kind of like Bitcoin here. We tried to break out, kind of formed a double top, if I can kind of exaggerate that a little bit. Top, neckline, we broke down below. We're coming back down now, okay? So as far as my longer term positions, I'm still happy with this. Of course, we both know we've made a lot of money off of this so far. But right now it has broken down. And if you want to sell some off and maybe buy some around, I don't know, 17 cents or just shave off a portion of it to buy back some later on, you can definitely do that. Or if you just want to take some profits for a while, see if it comes back down even lower than that, maybe back all the way to 16 or 15 cents, you can definitely wait to buy some more down there. So, but right now it did break down. It is bearish. I mean, of course, it's a long-term hold for us, but it is still bearish now because of the breakdown, and it's starting to follow the technicals a little bit more than normal, which I kind of like, because that means it's going to be easier and easier to trade off of this. Just like when it broke out here and we bought some more. Look at that, broke out, consolidated, and then a rip, up for a gain of what was this? Around like 60% returns in a few weeks. But right now, yeah, it is bearish. Keep an eye on it if I can get out of here now. But one thing you should see here is if I can go over here. The one, it's not concerning to me, but it's annoying because I do want to buy some more. You see how you have all the sells lined up right here? Well, some guy just has a massive buy position way down here at 18 cents. Somebody's trying to load up on BGB for the future. I can't blame the guy, but man, I do want it to come down a little bit more so I can buy some more myself. I would really appreciate that going forward. So that's what I'm looking at right now. Because otherwise, pretty soon they're going to allow us to stake it, right? Then I'm going to transfer some BGB back onto this exchange because right now all of my BGB is pretty much off except for what I sold. Like you could see like $2 worth of BGB on my account right now because everything else is on my hard wallet, right? So right now, it's fine. It's bearish. For longer term holders like us, it's fine. But if I'm waiting to see what happens with this 18 cents here because that's 141,000 coins right there or tokens that this guy's trying to buy at a valuation of what, like 18 cents. So what's 140,000, like a fifth of 140,000, whatever that number is, like 30,000 or so, 30, 60, 90, 120, 150ish, yeah. So he's trying to spend about like $30,000 to buy a BGB, which is fine. I wish I could put $30,000 into this coin, but I can't, and I'm not going to put my whole portfolio in it, basically, right? So, or at least, yeah, long term, yeah, I'm not doing that. So, but here, so got to be careful with this level right here. I'm hoping that I can buy it below 18 cents, but yeah, it is bearish right now. I hope it gets more bullish down the road, but of course, this is a longer term play. We bought it over here back in September, way in no man's land, and it's been performing very well. This, if you bought Bitcoin in September, probably down compared to where PGB is, right? But right now, yeah, it looks like it's coming down a little bit more. It kind of reminds me of this kind of drop that we had, or this drop right here. Well, eventually it'll come back up, right? But first of all, we need to have some burning pains off here. And something else that happens sometimes after the launches, you guys will remember I told you guys about the, what was it here? Kyoko. So basically how this works for all of you guys that don't know, they have a launch pad and it allows you to buy coins before they go onto the exchange. And in order to do this, because they only have a certain amount of coins they can sell, if you just have money in your account, you don't have to trade. If you just have money in your account, you have the opportunity to get tickets, and there's a lottery driven. And if you get a winning ticket here, we can have one winning ticket or however many. It allows you to buy a certain amount of this coin before it goes live, right? So Kyoko was the last one. I don't know what can I find the chart on Kyoko really fast? Maybe Kyoko. Yeah, there it is. So I bought it. So I got mine at 10 cents. All right, 10 cents here. And then it just hopped on. It had a big spike up at the beginning. Now it's down. But look at it like this. 1 hour chart. I bought it, so I got it, before it went live at 10 cents, and I sold mine at 34 cents. So 10 cents down here before it opened up, was able to sell all the way up here for 34 cents. Not a bad return for just holding it for 1 day. I got it literally the day before it got on the exchange, in and out, nice and easy, lemon squeezy. Because of the way it works out, there's only so many coins they can sell before the market opens up, though. So I didn't make thousands of dollars. Well, not hundreds. I didn't make tens of thousands of dollars in profits off of the coins I was able to buy. So, but I will let you guys know the next time I am able to do something like this, or I see another one, because so far these make good profits. Bot and ZBC are the other ones, and there was one more other one out here, not. Right, so I don't necessarily hold these for long periods of time. I buy them before they go on exchange, and I sell on the exchange pump. I have a link down below if you want to try it out on BitGet, but ZBZ was a good one, Bot was a good one. So let me show you very fast. I know this is going off every question, Monica, but you get what I said about BGB. But we got Bot right here. So now Bot's been going down, right? 1 hour. So go to the day chart. There we go. How can I work this in a very easy way for you guys to see? So here it is. And so you guys can see it opened up at about 2 cents, okay? Right now it's actually just a little bit below that. But if you were able to get into it before the day opened, of course, then what you would see is you had potential profits up here all the way up to 130% or so. Let me go all the way up here. Oh, geez, yeah. Somebody loaded up on this for a long-term bet. But yeah, it went all the way up to 3,000% profit. I mean, me personally, I did not sell it anywhere near 3,000%. I sold it all the way down here, like 1,000, 2,000%, kind of nibbling away at my scaling out. And I was definitely happy with those returns again. And the other one that we just talked about was ZBC, I think it was. Let me get the full screen mode here. And then I won't talk about Not. Not was another one that worked out pretty well, but ZBC, these are the most recent three. ZBC is up 3% so far today. This one on the first day opened up at about 2 cents as well. And then over the next 2 days, it managed to go up here about 150% all the way up to 5 cents. I ended up selling a little bit, actually most of them on the first day for 45% profit. Next day I sold the rest, but not nearly at the top, so I just want to get rid of it. But it was nice, easy profit. So I would encourage you guys to check out these guys. It works out pretty well. But you have to have some type of money in your account in order for it to say, hey, here's a ticket, here's your winning ticket, and so forth. Otherwise, you could buy it right when it goes live with a limit order, but your profit's not going to be as much. So when I got mine at 10 cents and I sold it at 34, instead of buying it at 10 cents, you guys might have to pay for it at 13 or 14 cents and then sell it at 34 cents, right? So that's kind of the why you would want to have some cash in your account or just be able to trade on it normally. They give you more opportunities to make money with these things, because these things are they're fantastic, right? If you're allowed to trade them, you can make a lot of money off of them. Now there are caps to how much money you can invest in it with the tickets and everything, but again, it's still good profit, right? And that's all we really care about here. Let me go back over here to spot. There we go. All right. And weird thing here is actually, as I'm looking at this 15-minute chart, we finally broke out above the 20 moving average here on the 15, and we're still getting hit hard. I'm hoping we can consolidate here for a little bit longer and at least try to make a move up towards the 50 moving average here. Because look at this. Ever since we broke down below it here, it's been the main level of resistance for us going, causing us to go down even more. We've slowed down a little bit. I want to see a little bit more of a curl, even if it's just a daily wick. That means we're coming back up here to the fibs before ultimately falling back down. Not going to trade it, but I'm hoping we can see something like that happen here just to cool off a little bit after this disaster of a day here. Hey, Courtney. I just signed up for your newsletter. How often will that be? Will we get an email? Thanks. Yeah. So you guys will get the emails every Sunday. I will try to put more emails in over time. I think what's happening right now, though, is it's getting I use MailChimp. It seems to be something that a lot of people use. I asked a bunch of people, what do you use? They said MailChimp. It seems right now that because I have like crypto terms in it, a lot of the emails are going to your spam messaging, so you would have to check that out because I sent one out. I sent one out yesterday, talking about how Bitcoin doesn't look too good, the 50-day moving average, and how it might be a good short opportunity. But I think only a handful of people were able to open it. So I think that's because of the spam. Because when I tested it out to myself in the first place, it also went to the spam email until I told Google, like physically, like, hey, don't put this under spam. It's not spam, right? So every Sunday is to answer your question. And hey, Alistar, thank you very, very much for the super chat, my man. I really do appreciate it. And there we go. This is the I got the new layout here pretty soon. I'm gonna keep on changing up the stream here, but I'm happy that the new layout works. And thank you very much, Alistar. I really, really do appreciate it very, very much so. And there you go. All right, thanks, man. I really do appreciate it as well, dude. It's so nice. You guys can't hear it because I turned it off because I don't want you guys to hear the ping every time somebody subscribes or something like that. But I do hear a little ping every time, so I really do want to say thank you very much, man. I appreciate it. Hey, Michael. So when do we hit 34K? 34K. I mean, if we continue on this trajectory, we're most likely going to hit it next week or the week after. Uh, if you're looking for, so let me pull up a chart here. That's the Coinbase chart. So what would have to happen in order for us to have this bad circumstance where we head back down like 34K, 34K, 33K, etc. Here, do I need to add another Gann for Fibonacci level right here? Maybe. Yeah, let's do that just so you guys can see what I'm talking about here. Okay. So we've already broken down below these two major Fibonacci levels. One is this. Remember, this is a weekly chart as well. One is all the way back here. It starts at 2018. The other one is the more recent one where we talk about the lows from last summer around what, like 28,800, I think it was, all the way up here to 69,000. We held support for the short term one right here, and then we ultimately dropped down below it. We didn't even bother to stop here for too long today before we ultimately came down below this one. We had like a 15-minute break, and then we just kept on going here. Maybe like a 45 an hour break, but we still didn't stay there for too long. What would have to happen now is we have to bounce all the way back down here and break down below this next trend line right there. And that would take us to about 39,000. I think we'd probably have a bounce before that happened. So maybe come down here, bounce for like a week or two, ultimately using this Fibonacci level as our next level of resistance. Also using the 20 moving average here as a level that would probably stop us. So if we did bounce right here off of the weekly chart, that's where we might hit that $35,000 level you're talking about. Probably after one bounce, the 20-week moving average really stops us cold. And then, that might take 2 to 3 weeks here, unless for whatever reason Bitcoin really just gets slammed and the regular stock market gets slammed with it. I think the market overall is pretty resilient right now, even though we are seeing these kind of drops here. I'm not too concerned about like having a major flash crash until maybe like 3 weeks more, maybe or something like that, because we would have to follow it, break down below all these moving trend lines right here. And at the same time, we don't have another death cross really coming up for us for like another few days here on the daily chart, right? Oops. The next death cross that's going to happen is the 20 and the 50, but that's not going to happen maybe until April 22nd, April 23rd, about a week or two. All right. Right now, we're just testing out that trend line that I put on the chart for you earlier. But that's what would need to happen. It would probably happen in a few weeks if it did happen, okay? And remember, there's a bunch of support levels beyond that. Am I bearish on Bitcoin? Yeah, I am. I mean, I've been bearish ever since we had the weekly death cross way back over here. But remember, I thought we would never even break out in the first place, even though we did and it ended up being a fake breakout. I never saw this. Well, I saw there was an opportunity for it. That's why I bought the nibbles. But I didn't foresee us really having that big boom there. And you can see the Fibonacci level right here that stopped us, and then we finally popped out. And then it didn't even hold for, like, it only held once, and then we ultimately came back down, right? We will see how powerful this weekly death cross is for us, right? Um, my thoughts on the death cross. I think it's possibly going to bring us back down to the 200 weekly moving average on the weekly charts, which is somewhere it's going to be around like $25,000, $26,000 by the time we hit it, since it is continuing to move up, since we are above that weekly moving average here. But it's let me actually look at this for you guys very fast, because I think I looked at it earlier, but I don't remember exactly what I saw here. But before I do, let's see, not GANs. Well, no, I'm not looking at GAN fans. Load chart. Let's go with tutorials for channel. I think that's it. Okay, there we go. So we have the SMA, simple moving average, exponential moving average, double exponential moving average, and the triple exponential moving average, right? What I'm going to do here is go to the weekly charts. Okay. So we have the death cross right here. On the weekly chart right here, on the EMA, the death cross is going to happen in a week or two. That's the next big one we have to watch. So let me actually open this up very fast. Okay. Let me see if there's any history as far as exponential moving averages and death crosses. So the exponential moving average death cross happened after the crash, while the simple one actually happened before the crash. So that's kind of a good plus for the simple moving average here. Before this here, the EMA actually foresaw the crash happening a little bit sooner. So it happened. The crash happened sooner to the EMA over the simple moving average way back over here. So that's kind of a plus to the EMA if you actually asked me there. But let's see, low resistance, yeah. But after this death cross here, we still saw some bad stuff. So it still has an effect on us. But look at this. We still came down both times to the 200 EMA on the weekly chart. So still a good level. As far as Bitcoin's concerned over the next few days, that's around 27,000. Maybe we can manage to hold 27,000, 28,000 if we're going off of just the EMA. Of course, we have the wicks here, so even still, it would still come to both of the moving averages here. So take that part with a grain of salt. Okay, but let's go. Let me delete this little thing right here. What is that? There we go. Let's go to the DEMA here. Weekly charts. DEMA already had a death cross way over here on the 50 and the 20, and we've been feeling that pain really ever since, right? So nothing more recently than here. Death cross over here, drops following it. DEMA right here dropped. I have to say, I kind of like this DEMA better than the exponential. DEMA happened right here, kind of another warning, but this kind of ties up to the simple moving average as well. Yeah, I might look at the DEMA a little bit more often as far as the weekly chart moving averages are considered here, at least for breakdowns. But why doesn't it like the 200 moving average? Yeah, that's interesting. It doesn't like the 200 moving average for some reason. Chart, yeah. Weekly, nope. Oh, okay, that's interesting. I'm not going to press it right now since we're just kind of chilling out here. But last one over here is TEMA. Let's go over to the weekly chart. That first death cross happened way over here, and we haven't even had another death cross since then on the TEMA here. TEMA right there, of course. TEMA, yeah. We never even had a golden cross before this to kind of signal like a death cross to happen there. First had a death cross there, following after. Didn't really do much good for us there, but because the crash had already happened. TEMA is probably the least reliable, but I do have to say it does signal a pretty good move down towards some major breakdowns. But I think that's mostly because it's so levered up with the most recent candles that it just has to work like that. So it kind of shows you a little bit better. This one was a little bit better than this one. This one, it was too late to really catch everything. This one was actually more gradual. And I think that's part of the reason is there was more dumb money over here. More dumb money. And a lot of people that, not also just dumb money, but a lot of dumb money over here. But also a lot of people that bought over here and they all took the profits at one time, which led to that massive 2-week dump. This one, a lot of people over here, they already kind of sold out. They didn't have enough money to get back in the market. So there's more, wiser traders, I don't know what you want to call it, that kind of were able to buy over here. Remember, we nibbled all throughout this whole freaking few months of like just boredom. Then we finally made our money back. We started scaling out here. We scaled out here. We had our first big breakdown, and that's where we really sold off large portions of our crypto. Like, this is the weekly chart here, but right there. As soon as we started breaking down, let's find the daily chart here. As soon as we broke down right here, That's why I sold the majority of what I had left over in crypto, right? It ended up coming back up, of course, and then what happened? It still came down because as soon as that leg breaks down right there, you sell so you don't have to deal with all the following crap that follows. And I've been telling you guys this since like Dogecoin back in like way when everything was going good over here. But that's kind of my philosophy of trading. You gotta play it safe here. Or I don't even know if that was actually accurate. Let me see. Was this right here? Nope, we held solid right here. You deal with this crap right here, so you don't have to worry about that stuff later on. My bad. Weekly charts, weekly candles are a little bit different than the other ones. Okay, let's go back over here. Let's X out of this. There we go. But right now, Bitcoin's in a big, heavy battle. Bulls are not too happy with where everything is going, of course. But there's not much we can do. Like it's not just crypto right now; it's the entire market. You look at the S&P 500, Nasdaq, Russell, all of them. They're all just having some really tough times today, and over the past few weeks, and especially since I've been looking at a lot of stocks, and I've been doing some shorts videos for you guys, so you guys get the gist of what I'm talking about. That way, you guys can do your own technicals on them. But I have a watch list over here called YouTube Breakouts, and they're not necessarily just about breakouts, but any type of technical analysis of something I might be willing to trade here. PM, um, this one's like one of the few ones that was green on my list today. Everything else except for Macy's was red, so this one's fine. LHX fine, still in this nice little uptrend here, waiting for it to break down, and then I'll buy some here. Apple broke down below support today, also broke down below the moving averages. Look for a death cross coming up soon here on the daily charts. But on the weekly charts is where you see some warning signs for some stocks, not all, some stocks. So Apple's still doing fine. The 20 is still going up bit by bit. The 50 is still creeping up here. I want to see what happens if Apple does get squeezed in here again. Microsoft, though, closer to a death cross here on the 20 and the 50. Netflix already had the death cross here. And last time Netflix broke down, it had a nasty move. We're at another point for Netflix where we could have a really good opportunity to buy puts here. I'm thinking of buying some YOLO puts tomorrow for like $300 on Netflix, expiring 2 weeks out. They should be fairly cheap, and I am going to have some fun with that. YOLO. Normally I would wait for the breakdown, but right now I'm in the mood for a YOLO play. Tesla right here. Death cross coming. We almost had a death cross over here, but we broke out, had a nice move. We're at the Fibonacci levels right now. We'll see what happens to Tesla, but Tesla could easily come back down to like 784 in the next few weeks. Nvidia, death cross getting closer. And this is weekly death crosses, of course. Avgo, it's fine right now. No big concern there. Home Depot, death cross coming. Lowe's, death cross coming. Facebook, death cross already happened. Another death cross coming with the 200 though, and the 20. And then we have, of course, the 50 and the 200. That's what's going to be interesting for me, and it kind of lets you guys know that hey, tech is going to have a weird spot. Intel death cross is coming, already happened. MU death crosses. Just had a golden cross here, not as bad. That breakout was pretty nice though as well. Give this about until maybe summer, then you might see a death cross there. Ooh, that's no. Okay, that's fine. AMD death cross inbound here. So I'm not going to go through the whole list here, but you do see a lot of weakness forming up here. Last death cross ended up having some worse moves for it, but that was all the way back in 2020. We haven't had an organic death cross really for a lot of these stocks since 2016 or 2018, depending on if they were part of that flash crash. But this was a double bottom here, followed with a double top in the middle of it, of all things. Wow. Bottom, but top. Both played out fine. As soon as we broke out above it, it was soaring time. But, yeah. Try to do an inverse head and shoulders there, but that didn't work out. Anything else here I should tell you guys about death crosses on JP Morgan? Visa already had a death cross using the 200 as support. Macy's is green today, also going to have a death cross here pretty soon. So, the entire market's just not in a good spot. And because we have all these new institutional investors in the crypto markets now, when they feel, what's the basic way I've explained this to you guys in the past? So they have portfolios and they need to manage their risk accordingly. Bitcoin and cryptocurrency is more risky than the regular stock market. So when they're forced to sell off stocks because the market's a little too much for them right now, or it's just coming down a little bit more than they might want it to go down, right? What they do instead is they take some stocks off the table, right? They just get some cash back. But then what happens is they have some cash on the side, some stocks, but now the crypto is taking up more of their of what they own that's actually on the market, that's being influenced by market sources, right? Up, down, all around. So what they have to do is they have to sell off some crypto to keep that balance in place to make sure if crypto goes down a whole bunch, they're not over positioned in that one sector. Hope that makes sense. And that's partly what we're seeing. It's not the main thing. It's partly what we're seeing. And of course, bears are just lively today. Lively bunches today. But of course, remember, we saw this coming as soon as the breakdown happened on Friday. Now, it did take a few days, and it had a one fake pump, which we talk about a lot on the channel. And that fake pump, it brought out hope in people, and hope is a really scary thing when you're trading in the markets. You never want to hope that something's going to happen. You usually go off of the technicals, which is why if you guys get a chance, I haven't talked about patterns too much here, and I do need to make some more patterns videos for you guys. But you see all these patterns over here? Get to know how to trade each and every one of these patterns. It'll save you guys so much time and money down the long run. Get Quizlet. I think Quizlet's a website, or you can just get flashcards if you really wanted to do them at home. Either way, it'll work pretty well for you. But get to know those patterns, because what we talk about all the time here. I'll do this very fast for you guys. I know I did it earlier. No, I don't have to do it again. But basically, when you trade an ascending triangle here, right? And so we have triangle like this, right? And the price is coming in. A lot of times after it breaks down, it comes back up and then it decides to fall back down. So you can take a short right here, or you can take a short right there, because sometimes it just goes down, right? But if you want to do like a 50% open short position here, double down up here after because this short's going to be losing money at the time. Then once it falls down, you can make some good money there. And that's in a simplistic view. That's exactly what happened in yesterday, right? Let me go to the Bitcoin 15-minute chart. We broke down. We consolidated for a couple days. We came back up to test out, and then that's where the shorts took advantage. I mean, they didn't even bother to really short here. This was all like a retail trader shorting. Short. People just kind of chilling out, trying to pump it back up. And then boom, once we got back up here, that's where they hit us hard. It happens more often than you guys think. So go back in time, look at some of your old charts. Sometimes if you guys shorted and you guys lost money on the short for whatever reason, double check that. Because a lot of times if you short right here, you might get stopped out here, or you might freak out to the point where you're like, okay, I got to close out my position, only to watch it tank afterwards, which is a horrible feeling. Because shorting is it can be emotional too, because you want it to go down and not up, which is going against the grain of who most of us are as investors. There we go. Okay. And hey, Bartford, happy to see everybody here tonight as well. I'm going to add some more, hoping to stake soon. Do you see it $1.5 next year, April 2023? Well, it kind of fits in there. I could see it like somewhere between $1 and $1.50. I think it might peak at $1.50 or something like that, right? But I think it's most likely going to rest around $1 to like $1.20 with a couple spikes in there in between. Sure, but my price range for next year is like probably like $1.25, $1.50 if you really want like on the high end of that. Well, at the really high end, I would say maybe $200 or so. But that depends on how fast BGB or BitGet grows. Like what I tend to do sometimes if I'm looking at a company is here. Go over here to LinkedIn. They have 4,000 followers right now, and then you see like their jobs and stuff, and what they're hiring. So many people. They are growing like freaking crazy right now. So yeah, I'm thinking at least around the dollar mark, if not $1.25. And if it gets higher than that, awesome. But you might be more right than me, because you know how conservative I am when it comes to like projections going out. I'm always at kind of the bottom of the spectrum here. But like they have a lot of employees and they keep on growing, which means like they're going all across the world pretty soon. Now that doesn't mean they're going to be the next Binance or anything, but I don't need them to be the next Binance. I just need them to have like a couple hundred, like a couple billion, maybe even 10 billion market cap over the next 5-6 years. Perfectly fine with me, because I will have made so much money I will not even care, right? But yeah, so all these people over here, they all work for BitGet, and they're all just all over the place here. So and then but a lot of them live in Singapore, China, Hong Kong, Korea. What else? Beijing, Turkey, so forth, and they all studied all over the place, actually all over the place. So I'm encouraged to see where they go from here. And the fact that they're already in the American market makes you feel really good because they don't have to worry about, like, I feel like at one point or another, it's going to be very hard for other corporations outside of America to come in and, for us to use their exchanges, because I think pretty soon the market's going to be oversaturated. Give it like a year or two. But the thing that could help that out is if over the next year or two we see crypto have a, what do you want to call it, more acceptance by the average retail investor or the person that doesn't really know much about crypto. Over time, if they start understanding crypto and they want to make more money in trade, especially as the economy gets worse here, I think people are going to be coming from all over the place to kind of look for the new exchanges. And BitGet's a really cheap exchange, and it has paper trading. Paper trading is like such a crucial thing. But yeah, $1.50 isn't unreasonable. What is it? $1.50 right now. So what's that? 20 cents. Let me do the math in my head. 100 million at 20 cents. So 500 million, like $750 million market cap. It's an aggressive, but it could work out. It could definitely work out there. I'm buying it and I'm holding it for like a longer period of time, like even though I just shaved some off because I want to buy some other 18 cents here. But let's see, that guy still has that position at 18 cents and it's not going down below that. I mean, I get what he's trying to do from a technical standpoint. He's trying to, what did I do right here? There you go. He's trying to just keep us above the 50-day moving average, but I don't know if it's going to work. So if I wake up in the morning and it's still above 18 cents, I'll just buy it back. Because basically, it's fallen to, what I sell at like 19.10 over here. It's lost about 5% of its value, so that means I kind of walk away with like 5% more coins at the end of the day, which is my main goal here, not to really make a profit, but to just accumulate more coins. And hey, David, yes, I drew the trend line that stopped the crash on my chart. There you go, right? I know I kind of phrased that in a weird way, but I just got back inside from letting Loki use the bathroom. But well, I mean, remember, I don't use trend lines on the bodies of candles too often. I don't usually like the way they go because what usually happens is they hit it, but they ultimately keep crashing down to the next major level of support, which means it's kind of like a holding pattern. But right now, here, if I were to go to the 15-minute chart here, and let me go. Well, actually, I'll go to the daily chart here first. And we go for that body candle, body. Now let's go to like the 1-minute chart. See how there's not much force really bringing us down? There's not really much force bringing us down here. Now you can tell it's resistance. Look at that. Having a little bit of trouble with it, not a lot, but it's not nearly as strong as a level of resistance and support as the regular ones that we look at that are forming off of the wicks of the candles. Maybe the 5-minute looks a little bit nicer. Tried to hold, came down, resistance, support. Finally fell down. Now it's resistance. 15 looking any better? No, he didn't hold it there, but that's fine. But yeah, so overall, we're not in a really good spot as far as Bitcoin's concerned. We're hoping that we can have a short-term reversal here, but not a short-term reversal that lasts like for multiple days, just for like maybe a few hours or something like that. Let's see back over here. But let me take away. I mean, look at that. See, kind of had some issues with it right there. Come back down. Okay. There we go. All right. I had one Kyoto winning ticket, but they only gave me like 1/3 of the coins, which I was able to sell. The other 1/3 they will do second quarter, last 3 in the third quarter. Yep, same with me. So they make sure that you can't just tank the price in the first day. I'm fine with that, but the profit in the first day usually covers everything else, just because of how much it pops. Like one of them was a couple thousand or 3,000%. The Kyoko was like 250% or so, and then the rest of it, yeah, it's fun to write out because. What's the price right now of Kyoko? It's like 24 cents, 25 cents, and you still were able to buy it at 10 cents, even if it like goes over the next quarter. As long as it's above 10 cents, you should be fine going forward with it. But I think it's where's that in the rules? I won't go into it, but yeah, they'll give them to you over time, and same thing with me. Hey Alex, hey Michael, I was watching BitBoy Crypto, and in his analysis, he said there was a blood diamond forming on the weekly chart. Do you know what a blood diamond is? I do not, but I can look it up for you, Vast. Remember, I like basic, simple technical analysis because it works. Now, I mean, Fibonacci's and Gann fans and Ichimoku clouds. Some might say that not. It's not simple, but still, I don't like to go through all the crazy stuff. So he said there's a blood diamond forming. Okay. Let me see one of these. Okay. Size the diamond. Okay. Well, I get what they're trying to say here, but it's called a diamond. Huh. I mean, from my viewpoint, I feel like you don't even need the whole diamond. You just need the support line on the bottom, and I think that's where my distinction from it goes. Um, Let me see. There's other examples over here as well. Let me see this one right here. I, that's not even a that's just a trend line. It's just a okay. Let me try to find it on this chart for you though. But yeah, when I see something like that, I don't even think about the actual like the diamond part of it. I'm like, here's a trend line. We've been following the trend. We've broken down below the trend, and now let's see we're short. Now we can make money. That's like the so it's basically just a trend line. I mean, it's a trend line, but you add on the extra lines around the side. So I'm guessing it does have a use. I'm probably being a little bit facetious when I talk about it like that. It probably does have a use. But I mean, from what I'm looking at, when I look at stuff like that, all I'm looking at is that base trend line there that's going up, right, or down, whatever way the diamond is forming. Um, Let me go over here to the Coinbase chart for you, because I can just kind of make it a naked chart here. Coinbase, yeah, Coinbase. Good. Now, diamond pattern. What I don't know. I don't know how to draw a diamond on this one. I'll have to watch his video, and I will show you tomorrow. I'll watch the Bit Boys video. I don't know if he actually talked about the blood diamond. I'll see it, but whenever I see stuff like that, or like, it just seems like a simple trend line that I need to worry about. Like right here, a trend line. You buy the breakout, it's fine. A trend line right here, if it breaks down, it's the same thing. I don't know why you need all the extra stuff here. Because usually like I don't use the past too much when I'm trading unless I'm going more of a big macro level, which we've been talking about as far as Bitcoin with the weekly death crosses. But as far as I see, like my head, um, it just it doesn't. My head can't wrap. I can't wrap my head around it. It's kind of like here. Hold on a second here. I'll go back over here. Like this thing. This like this stairs thing. It messes with your mind. So if you were to flip this upside down, it would look like exactly the same as it does now because it's like one illusion like that. When I look at stuff like the blood diamond patterns, I'm just like, isn't that just a trend line? I mean, if you take away the left half of it here, like see, oh, okay, I don't want to do that. But if you take away the left half, isn't that just a symmetrical triangle waiting to be broken out or break down one way or another? Isn't that just a symmetrical triangle? And I put this on top, right? Uh, oh, you guys can't see my mouse on top of it, but look at the top left hand corner. Isn't that the same thing? Just half? Isn't it just half of it? Right? So, I mean, that's where my head is on this specific topic. Uh, if you want more of an explanation, I'll try to find out more information. But as far as I can see, that's just basically a symmetrical triangle kind of mirroring itself, if you will. But yeah, that's what I think about right there. I think it's a fancy way to use technical analysis terms. Again, I'm a very simple dude. um, let's see. Hey Tony, Netflix $300 put expiring 4/22 is 370. Not really cheap. It's cheaper than what you would buy closer to the money. Um, but yeah, what's that gonna be like $370 per an option? I still think it's gonna be relatively cheap. Or if you wanted to, if it actually does break down here, you could go down to 270 and swing it where how much does it take? No, because I don't want theta to be taking too much off of my hands for me. But yeah, I mean, I would say 300 is going to be fine for me as far as those options are concerned. Maybe go down to 270 if you want something cheaper. I haven't looked at the prices yet, so I'm not entirely sure. But I know 370. Heck, when I did the GameStop options last year, they were $1,500 for one. So what did I do? I actually only bought one option. Oops. Okay. Pushed my foot on the plug on accident. Almost turned off all my computer. Uh, and hey, Michael. Blood Diamond is Leonardo DiCaprio movie. That's the first thing I pulled up actually when I showed it when I searched for it. Why are the sell bars always so much lower than the buy bars? Particularly right now, as we're looking at this Bitcoin chart, a lot of it has to do with the moving averages. Now, I don't know the exact reason for why this happens, but the majority of the time when we're breaking or breaking above or below a moving average, we tend to have longer candles. And it's just more of a percentage going up, more of a percentage coming down here. And you can see that, one out of one, two out of two, three out of three, four out of four, five out of five, six out of six, seven out of seven, eight out of eight, nine out of nine. Even that maybe that's 9 out of 10 or 8 out of 9. I don't know if you want to consider that a larger candle, right? But right here, 9 out of 10, right? 9 out of 10, 10 out of 11. Well, this one, 10 out of 12 because we didn't really do much. That was kind of stayed. Then we popped up the following day, so it didn't really work at that time. Right here, longer candle. So the majority of the longer candle, okay candle, okay candle, longer, okay, sure. But the majority of the time, it just happens that we have the larger moves off of that. And right now, unfortunately, we were just on the other side of that. Remember, we fell down today or yesterday's candle, 6% in the day, right? But just about a month earlier, we went up 8% in one day off of the moving averages. So we do have some really gigantic green candles as well. But right now, what's been happening is not only did we break down below the moving averages here, we also broke down below a trend line. And that's why we're seeing a little bit more of a nastier move today. There's the first breakdown right there if you wanted to start selling off. That's where we first started selling off, right? And then we have the other one, which is right there, which is the next point we broke down below. And then we got back up here before ultimately getting knocked back down. All right, so it's a pattern. Get used to the moving averages, though. Now, you can do this on the 15-minute chart, 15-minute chart sometimes, the 30, 45-hour, whatever. I prefer to use that thought process of the larger candles on the moving averages, specifically on the weekly charts and the daily charts. Okay, that's what I use them mostly on. You might be able to use them, on the 15s and the hours of that, but I don't think it's going to be as accurate all the time. Like we have a pretty consistent rate here on the daily chart. On the weekly chart, though, longer candle, kind of choppy here. So okay candles, not as accurate right here. The 20 seems to be much more of a downward mover than the 50. Long candle, well, we support, then we kind of broke above it, so that wasn't a breakdown, but breakdown there. Longer candle. Middle candle right here, nothing really crazy there because we didn't really break down below it. We kind of just went sideways and then we went down. Medium candle, it's not all the time on the weekly charts here. Longer candle there. I don't even know what you want to call that candle. Non-existent candle. Longer candle, longer candle, longer candle there. Longer candle, longer, and so forth here, right? Where are we at over here? There we go. Oh, hey David. I don't think it's gonna. Wait, what's it? Hold on. So it's sent here. Why are the sell? Okay, just answered that. And why? And BitBoy does not do TA. He only reads the news and pumps coins. Okay, well, hey, he makes a living off of it. Um, I, I, I don't know what it is. I would feel so guilty about pumping up coins. The only coin, like when I pump up a coin, so to speak, it's like, okay, well, here's a breakout. There's a technical reason to be buying this for a few days. That's it. Um, or with the one we just talked about with Monica here, with the what's the coin I was talking about? Uh, Kyoko coin. And that one, you were able to buy it before it went on the exchange, and you buy it at 10 cents, and you could sell it around 34, 35 cents here. And you have some that's vested to you as well, which means you have to sell it down the road. But even for the coins I have down the road here, right? I sold my first batch at 34 cents. When I bought it for 10 cents, that's a good profit right there. If in a few months, when I get the next vestige, I get it at, if I sell it at 25 cents or even higher, I'm still in a good spot. 20 cents or higher, I'm still in a good spot. 10 cents, 15 cents or higher, I'm still in a good spot, right? So I'm fine with how everything like that's going to pan out going forward, especially since it's a good long-term hold for me as well. I saw that's why the vestitures ones are more likely for a long-term holding. But just kind of a weird world right now as far as how everything is concerned. But yeah, that's one of the reasons I don't watch BitBoy. He doesn't give me the news I want. He gives me like hype news. For more like bureaucracy news, kind of the more boring side of the news, which I'm kind of more of a boring guy when it comes to investing. I always recommend Rob's channel. He helped me out with all the Twitter stuff or the YouTube stuff about them demonetizing my channel, but he talks more about kind of the regulation side of what's going on. What might be going on down in El Salvador or any of that type of specific stuff. And he talks with a lot of other larger YouTubers, and they kind of have these little kind of like podcast style talks that they have with each other. Let me see if I can just pull up his channel very fast. If you wanted to ever look at news, yeah, sorry, digital asset news. So like he looked at the pullback today. Major bank predicts recession, short-term Bitcoin concerns, Tesla and then block to mine. So he's not going to give you technical analysis here, but he will just give you a gist of what's going on from a regulatory front and the real important news that you guys might want to know. Right now, the gist of it is, there's always regulation. The government's always messing up something, but over time, we're hoping that they get their act together. That's pretty much the gist of his channel, because the government is usually doing something really bad for crypto. But we'll see how much worse it gets, because right now, Biden looks like he's going to lose control of the House and maybe the Senate. And so if he loses control, I don't think he's going to be able to do any type of crypto regulation unless the Republicans have a say. And I think right now Republicans are more pro-crypto than Democrats. And I want to see how that affects the political landscape down the road, because if people could use crypto as a political tool, saying, hey, this is important to me, I want you to legislate off of it. Maybe it's not going to be the most highest priority on anybody's agenda, but they could pass a bill that doesn't really have much attention drawn to it that may help us out in the long term. That type of stuff is what I'm hoping for down the road, because from what I've seen in those hearings, which have been very boring with the executives in the crypto industries, or the blockchain industries, I guess you would say, Republicans seem to be more pro crypto, and I think that's partly because AOC and Elizabeth Warren have been kind of what do you call it, grandstanding, I think is the term. I don't know what it is. Republicans and Democrats, when they have a camera in front of their face, they try to do a big pomp and stack thing so they can kind of run on it or use it in a campaign ad or something like that. That type of stuff. Every party does it, but you get what I'm saying. They tend to do it for crypto more than other things, I've noticed. Or the left was doing it more than Republicans when it came to crypto. Does that make sense? So I think as we kind of shift to more of a moderate kind of thing going forward here, we should be able to see this. We should be able to see some good regulation come out of it. But right now, we can't leave the regulation up to the SEC, because the SEC will always overstep, because they're in the pockets of the hedge funds, Wall Street, and so forth. Right? Remember, the SEC really doesn't have a lot of funding. Nobody really funds the SEC because nobody wants the SEC to be able to do its job and go after everybody. Because the market would not enjoy a fully funded SEC. I don't think I would enjoy a fully funded SEC. That means less profit for everybody, but it does mean the system might be a little bit more fair and less fraud. But, I mean, what is Wall Street without fraud? I mean, really. Let's see. Hey, Alex. Yeah, it makes sense what you're saying, Michael. I was just confused because he was using terms I never heard before. Thanks for your input. Yeah, I mean, okay. I'm not gonna get mad at the blood diamond thing pattern that he's talking about. But to me, you get what I'm saying. I'm just like, Why would you use the full diamond if you can just use one trend line or two trend lines to do the same exact information? Because you're still trading a breakout. You're still going off of the consolidation period, right? The problem with that would I probably have with that blood diamond, it would probably give you a false sense of hope about how high it can really go. Because with most consolidations here, you can actually see there's I think there was one here, like right here. See the size of the diamond goes to how far the target should be. You kind of use distance to distance to try to make enough move here. There's no way you would really hold that position the entire way through here, unless what is this? Netflix? Maybe I don't know if this is daily or a minute chart or whatever. But I would never do something like that here because whenever they use diagrams like this, it's always like full hindsight after everything crazy's happened. It's never as it's never as pretty as that because this price target right there, I don't even know what they're using for this one, but yeah, it's not. But yeah, it's just a trend line. It's just a trend line, another trend line making a pennant here, and then normally when you're trading those types of those patterns here, then you could try to get a good estimate of how long the breakdown might happen. So like for us here, if I go back over here, go back to this daily chart. What's a good thing to use right now? We go right here, and we're looking at this. Now I guess this is really our level. I guess, yeah, we do have some resistance up here, but not much. Let's just say we have this ascending triangle, okay? Well, if we've been consolidating for like this much time, or however much time, that means if we do break down from this, it's going to be a pretty hefty breakdown because of how long we've been consolidating. The longer the consolidation, usually the larger the move upwards. That's usually more true in stocks, I think, than you see actually in crypto. But it does have an effect in crypto here. I would say more in the medium term, I guess you would say. But even here, let's see right here. We broke down. I wish there was a different measurement tool for this one. I know it on TD Ameritrade, but not here. We held it for like 42 days. Pretty sizable move over here. So what would that be? 42 days. I'm try to keep my finger here. So hold on a second here, guys. Be a brat about how I do this. Okay. Okay. So if we were to use that measurement technique here, that'd probably mean we're coming all the way back down to like $30,000 off of this one breakdown, which I don't see happening, right? I think we're gonna have to do a lot more bouncing and such before something like that were to occur. But I guess that really depends on how I'm actually measuring that out. But yeah, I don't like I don't like that exactly like that. I just know the longer it consolidates, I usually gonna have a stronger move. But again, I feel like that turbine or that style of measuring everything out works a little bit better with the stock market than the crypto markets. See. Hey Josh, this is the best channel on YouTube. Hey, I really appreciate that. I try to help you guys as much as possible, and I will be making more tutorials here over the next few days. I only have one ascending triangle tutorial. I want to get maybe by the end of next month. I want to have a tutorial video for all of these, and I'll probably redo my symmetrical, my ascending triangle video as well here, so you guys get a gist. I think I just have to get a good whiteboard software to actually draw everything on, because last time I kind of squished it down too much and it didn't turn out right. But yeah, so I appreciate that. And no hate on Bit Boy, but I like channels that teach more like yours and Jordan Cameron's channel. Yeah, I think teach. So the entertainers make more money, but I think that the teaching ones, I think they're just more fulfilling. I like them more. Like, and plus, you have to have the personality to be like, woo. Like, I feel like being that out there and being that happy all the time, it feels exhausting. And I don't like to be exhausted on stuff like that. When I'm really happy, usually because I'm playing with my dog or something like that, I'm like, all that type of stuff. But yeah, it takes a certain type of personality to want to become an entertainer in the crypto space. They make a bunch of money, they get a lot of sponsorships and all types of really cool stuff out of it. But man, oh man, it's a hard thing to do. But and then you get into that little period where this is something where like people like me that teach and other people like that entertain, they both do it. But then you get into the point where you're starting to see more and more YouTubers do pump and dump schemes, like the Matt Wallace guy. I don't know what pump and dumps he did, but he got Twitter went crazy on him for whatever he did. So it's that type of stuff where you have to be very, very careful about who you're watching. Um, but I guess, pump and dumps are kind of a weird little thing, but I would never do a pump and dump. Pump and dumps just, it feels really scammy. Scammy. Right? So, hey, Clifford, good evening. Let's see. Hey, Mike, what is Doge headed? Most likely down following Bitcoin here, probably down to like 11, 12 cents if Bitcoin doesn't start slowing down here before you take this potential drop down to the 200 weekly moving average if it does happen. But that's a while away right now. Hey, Lavelle, Dogecoin to 1338 or 1368? I'd probably say on the lower end of that to 1338. Hey, Alex, Michael, thoughts on Sushi Coin? I look at it all the time highs and how low it is, but thinking of buying some for long term. I don't know, Sushi Coin. So two things here. If I were to buy this right now, I might have 275 as a stop loss. Because if it does break down below this, I mean, it's going to get ugly in a hurry. We might lose like more than like 30-40% of your position. So I might use that stop loss of 275 here. If you're looking to buy it and be more optimistic about it, I would probably wait a while before we actually break out above this trend line. This trend line is going to take a while to break out above. Short-term buying opportunity, if you wanted to take it, would be something like this. We could have a pump back up to maybe $4.80 or so. So right now, there's not really a technical reason to buy it, but as far as the coin itself and what it kind of, what they do as far as the swapping and stuff like that, I have some. It's a longer term hold. Um, my price target for it over the next few years, like on another big altcoin run type of thing, is around like $5-6. Um, you know, I mean, not even what? Sorry, $15. Um, but I don't really have much money in it, if that makes sense. It's kind of something that I think is going to do fine. I don't really truly believe that it's worth a lot of my capital, but I think whenever we start turning things around, I think it'll be fine down the long run because it has utility. And I usually recommend that you guys buy something with utility unless you want to do a yellow on a meme coin. And a yellow on a meme coin can be just fine. You can make a lot of money with it, right? But as far as utility, I think this has it. I think it'll be fine in the long term. But in the short term, careful with that 275. I think we're most likely going to break down below it if Bitcoin does start tanking down to like $33,000, $34,000. Okay, you'll see it come back down to 275 and then kind of test it out again. And then if we start breaking down higher and start going down below the summer lows from last year, that's when we're going to see this really go down. So feel free to buy it for long term. You will make money in the long term. Just try to find the best price for you, whether that means you buy everything now or you slowly nibble in the amount of money you want to be purchasing this with. But yeah, I don't think $15 is totally out of the ordinary for this play. It would have to be on an altcoin run though, like a big one. Otherwise, $9 to $10. But I think we're gonna have another altcoin run eventually, right? It might take a little bit of time, but I'm happy to kind of make money off of those plays. Back to one. You do see Bitcoin slowing down here just a little bit here. We're not falling as much as we were before. Also because there is a Fibonacci level here supporting this. Hey, Clifford, what do I think about Ethereum Classic? Right now it's kind of in a precarious spot, so I'd be careful with it. If you're looking at Ethereum Classic, along with a lot of other altcoins, right? It's not just Ethereum Classic here, but we broke down out of the 200 daily moving average. We're coming down to the 50. We have another opportunity to break down below it. We're going to have a death cross pretty soon here. So I could see Ethereum Classic coming back down to like $29 or so, or probably short term $33, $34 over the next few days. And then we'll see if Bitcoin can really help us out here. But for now, it might bounce around a little bit between the 50 and the 200. But ultimately, I think it's going to break down here unless Bitcoin were to have some type of major reversal to start climbing back up here, which could happen, right? But it would be less about the technicals at that point and more of what the whales and the larger investors are able to push Bitcoin to, thereby pushing all the altcoins back up as well. There we go. All right. Do I say FTM breaking $1 just nibbled some more, but I want to buy a bag of it? Thanks. Right here. What are you talking about? FTM. Let me just take some stuff off of here. So let me just see. So this is a trend line that we really need to worry about. Trend line that we need to worry about here. Okay, yeah. Anything else that could help out there? No, okay, no, we're fine. Okay. That last part was just me having fun to see if there was anything kind of showing up here, but it doesn't look like it. So if I was FTM, I could see this coming all the way back down to, yeah, pretty much $1. Just to test out support. We'll see if that happens in a few days or so. But as far as this is concerned, if you didn't want to buy a bag of it, what I usually recommend is buy a little bit today, a little bit tomorrow, a little bit the day after, a little bit the day after that, or you can buy every Sunday, every Friday, every set, whatever, right? You can set up your own schedule for buying it. But I would slowly enter into a position here just to protect yourself in case it does keep on going down. But excuse me, looking at this from a weekly chart perspective, right? It's just been slowly kind of moving down here, and it really hasn't had a major drop just yet. I'm waiting to see if we're gonna have a death cross on this one pretty soon, because then it might actually come all the way back down here to like 45 cents or so, which could be a pain if you did buy a whole bag up here at $1.12. Okay, so just be aware of that. We haven't had a death cross for this one in a hot minute. Nope, never even had a death cross on this one before actually, unless this chart doesn't go back as far as it should. I think that's probably actually the reason here. But be careful because when Bitcoin has its nasty drops, just like how Bitcoin did back over here, right? Bitcoin crashed. This one fell down just the same. So careful with buying a bag relatively high up here, right? Or buy a massive bag of it. I'd probably say just nibble in a little bit every week until you hit that target. That way, if it does keep on coming down, you're fine. And then if you think about from the long term price target for this is going to be somewhere like $8 or $10, right? So if you're holding it for a long term play, you know, whether it's $1 or $1.12 or $1.50, or if it comes back up a little bit more, it's not going to really matter because by the time it moves all the way back up here to like $5 or so, you're still looking at about like 500% profit, and you're still going to be very happy with the returns that you've been given with it. But be careful of that short-term price action moving. It may come down. Okay, this would come to the point of it coming down to the 200 daily weekly moving average. That would be the thing that really drives the price up like hard. And if that doesn't happen, $1 might be a good support level for you to check out. Yeah, no, it's Tony. And hey, LeGrasso, happy to see you back, my man. Oh, what's right here? Somebody said something earlier, but I think I skipped over by accident. Let me see right here. And hey, David, you think we're getting squeezed? No 200 MA this time. I think there's an irregular bear market, higher highs and higher lows over the past year. So yeah, kind of getting squeezed if you walk in a triangle here. I mean, it'll be interesting because right now, I mean, like if you look at since 2021, basically, we are in this massive pennant here. If you look at the weekly charts, we'll get off of the Fibonacci's and everything. But we are in this kind of a little. Oh, I don't have the magnet on. Hold on. There you go. There you go. Right. This is really that pattern that we're looking at right now, and we're hoping that somehow, when it comes down to it, and we test out this level, we don't break down, but instead we kind of consolidate, then start moving up over there, and that'd be the good golden scenario right there, where we have an opportunity to buy really low off of a major level of support, and then we can manage to have a little bit more of a rebound, if you will. And if that doesn't happen, that'd be more of the more bearish scenario where we break down, then we start heading back down towards like 20, what by then maybe $27,000, $26,000 or so. Then we start to curl back up, and then we start to do the whole pattern thing over again, which would lead to I'd rather see this happen than this happen. My just like the historical patterns of it says, it's most likely going to come back down here. And then of course, actually now that I have a naked chart in front of my eyes here, oh snap, I didn't need to do that. Wrong chart to be messing up with. Okay. Get rid of this. I really just want to see us hold the monthly moving average here, the 20. Broke down before it here. The month after we broke down below it on this one actually was the month we had a big move down here. So I'm really hopeful that we can stay above this pretty soon, because we came to the 50 over here. We didn't come to the 50 down here, but it's going to be a wild ride nonetheless here. But this was more of just a basic descending triangle here. This one's just more consolidation between the fall. We'll see what happens. Over the next 2 months or so. I really don't want to see a crash here, but I don't want to project my bearishness onto you guys. There we go, though. I'm really interested to see if we can hold this for the month. Because remember, the last few months we've come down, 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 and we've still had issues here. But as far as I don't even know what was the body count low, 34, 322, 34, 38, 491. We barely had a higher low on this monthly chart. We'd want to close above this to keep the body of the candles higher lows. But right now we're kind of, at least for the wicks themselves, higher lows, higher lows, higher lows. We don't really want to break down below 37,161. If we break down below that, then we're kind of in trouble as far as the monthly chart's concerned. But since then, we've, higher highs, higher highs. We broke that cycle this month here, but again, we still have 18 days, so maybe we can actually have a higher high here. But yeah, so we're kind of in this weird little pickle spot where, we're just annoyed at the price of Bitcoin. But at the same time, like, there's a lot more selling pressure, obviously, than there's buying pressure. Here, one. There we go. Okay. And hey, Tony, yeah, nibbling is probably the best. Just in case that does happen, we do have a larger drop. But I think nibbling will probably give you the best, average going forward with it. I mean, over the long term, I found that to be more true. Right now, there are sometimes when you want to nibble into it, or you do nibble into it, and what ends up happening is a massive skyrocketing move happens, and you're like, oh, geez, I could have bought more. But more times than not, when I buy, the price continues to go down, and then I'm happier in the long run for the longer term plays at the price I was able to accumulate on. But that's if I buy a little bit here, a little bit next week, a little bit the week after that, right? Kind of like what I'm doing right now with Robinhood. So you guys know I've been buying up Robinhood, but actually maybe I should just pull up right here. So we got Robinhood down here. I started buying Robinhood like at $12 or so. I've been nibbling a little bit here, nibbling a little bit over here, nibbling a little bit over here. I didn't nibble anything over here because it kind of popped up all of a sudden. But I was like, is Robinhood going to start going off of a little rally, and I'm going to be really ticked off that I didn't buy more? And I was like, it's okay, I won't chase it. Then all of a sudden, I was able to buy a little bit more yesterday because it came back down, right? And so I was able to save myself from buying up here at $16 and just buy down here at $11. You know the difference? It's a 30% difference right there. And that's why I like nibbling a little bit more, right? But I think Robinhood will probably continue going down until they fix some of their problems that they have. They need to embrace crypto wholeheartedly. They need to figure out another revenue stream for themselves. It needs to be a little bit better there, because a little bit better going forward. They The GameStop fiasco really hurt the reputation for retail traders. It really hurt their reputation. And rightfully so, because their CEO lied to America on live TV on CNBC, lied to everybody, like straight up just lied, right? I think the best thing for this company would be to have him move out, keep all of his shares, keep all of the money he's made. He set up a good product, or an okay product now. But then they have something that's better suited for growth, cop in the company, and really start finding ways to increase revenue. And that might mean that, maybe they keep the app kind of similar to what it is now, or they kind of give you little perks here and there. But maybe that means they built out a full-on exchange, kind of like how BGB does, right? Where they have all the exchanges, they have futures and everything like that, so they can build out a better platform there where they can make more fees, so to speak. And then what Robinhood could also do going forward is Robinhood could also, over here very fast. Robinhood could also come out with a coin that, you know, if you that they have a contest or something where you know, if you have the Robinhood debit card or if you're a Robinhood Gold member, you get like 500 Robinhood coins. I'm not entirely sure the math about all that stuff, but you get what I'm saying. They could be doing a lot more stuff to improve the valuation of their you know, their stock price, and they have the resources right now in order to do that. But their CEO, I don't think, is really the right person to steer them in that general direction. Like, I'm a freaking YouTuber, and I can figure out a whole bunch of different ways they can make revenue here. But it really requires them to expand and become more of a more of a legitimate contender of where people would want to put their assets at. I know there's people out there that have like tens of thousands of dollars in Robinhood, but I'd prefer to have tens of thousands of dollars in my KuCoin accounts, my Binance US accounts, my Bitgate account, kind of mixing them up all there, like a little bit here, a little bit there. Like in my Bitgate account, I only have like $3,000 in there right now, only 3,000. And I have some money in my most of my money is all tied up in TD Ameritrade right now, right? But there are ways that Robinhood could be making money without like charging commissions and stuff like that. They just don't seem to be able to do that just yet here, and they can't just rely on meme stocks and meme coins to fund them as they sell the order flow data. Right? They need to find a better way in order to get those transactions through. Do you see coins like Crowcoin and BGB going up like Binance Coin did? Less about Crowcoin, more about BGB. And the main thing here, as far as those two coins are considered, okay, so we have Crowcoin here. Right? Good coin. I have some for the long term. It already has a $10 billion market cap. 10 billion. But look at BGB here. It has a $90 million market cap. So there's much more upside there. Much more upside. But it's taking a hit just like everything else right now. But yeah, I could see long term this giving even this guy's okay. This guy's kind of spamming everything, but you know, BGB to $5, whatever. But long term, definitely going to be giving you more profit than you would get from Crowcoin, definitely. Especially if the exchange works, it's fine. It's number 2,688, and it has utility. It has a purpose, which is why I love all exchange tokens. 2,888 versus 19, right? Now, this is a good coin to hold for the long term, of course, but you know, the upside is much stronger as far as with me right now, as far as BGB is concerned. And so I think Procoin will be fine in the long run, perfectly fine, right? But I like if I go over here look at Procoin and I go on the weekly chart here, this isn't a good example here, is it? No. Okay. See, Crow used to be all the way back here in 2019 at a $30 million market cap. That's where I first started to buy BGB when it was at a $33 million market cap. And now the market cap, it peaked up at like 21 billion, right? I don't even know if BGB is ever going to hit 20 billion or whatever, but I like to buy and hold here, deal with all the ups and downs of the market for years to come, and then give it to the next altcoin season. It's going to rip. That may happen in 1, 2, 3, 4, 5 years, maybe after the next freaking halving for Bitcoin. But when it happens, it will BGB will rip, and I'm going to be happy that I bought in that $33 million market cap, and I was able to take in all those juicy profits there, all those juicy profits. But again, you know, it was at 30 million market cap in 2019, February 2019. Before it got to the really big pump where it was up at 3 billion, that took about what was that? A year and a half, basically. A year and a half in order for it to hit 3.5 billion. And then after that, it took 3 years before it hit 5 billion, and even 2021, 2 years, excuse me, yeah, 2 years for it to go all the way up to 21 billion. So I'm kind of in that time frame, like I'm waiting for another big altcoin season, but I don't know when the next altcoin season is going to come. Nobody knows. But when it happens, I'm assuming that BGB will have had much more customers, much more mainstream, good at the marketing. They're expanding everywhere, and they're not just in America. They're in all of Asia right now. So that's where I kind of see BGB going in the future. But for now, the fact is that Kronos or Crowcoin, it just has such a massive market cap that you could still make money off of it. But I think the maximum I could see Kronos going back up here is like if we go over here to price, right? What 410? What is it? 40 cents. It went back up here to like what? 80 cents, whatever. So maybe if it goes up to $1.50 or so, you're only going to be making like maybe 150%, 200% on the next major run that you buy or that we see here. Meanwhile, BGB can make like 500, 1,000% on the next major run that we see over the next few years. Does that make sense? The upside is just a lot more as far as it comes to BGB token. But Crowcoin is much safer because it is a larger exchange, and I don't foresee them having any major issues. Smaller exchanges like BGB, there hasn't been any major issues that I've found out so far. But if the government wanted to pick on a smaller exchange, that might be the size of like, okay, well, we can pick on them, and we won't have any trouble going forward, because they don't have all the lawyers and stuff like that. I don't know if they do, but you know what I'm trying to say here. Because right now, as far as BGB Crowcoin's concerned, look at this. First one right there. This is our support level, kind of looking like Bitcoin. BGB may Crowcoin may come down to like 39 cents or so. Then maybe we'll see what happens if it does break down below that one. Ooh, excuse me. Whoosh. There we go. Okay. Do I think Ethereum moving to proof of stake will help out Ethereum Classic? Yes, I think proof of stake is going to be good for them going forward. Proof of work kind of sucks. We all kind of know this now. Yeah, do well. The biggest thing that I like about Ethereum Classic, it's on Robinhood. It's on Robinhood, and it's the lowest market cap coin on Robinhood, I think, or the one that people would probably talk about. So I can see it having a big boom on the next altcoin season. But until that happens, it's just going to be like everything else following crypto. Everything else following crypto until that really big movement happens on the next altcoin season. It's right here. Ape, maybe down to like, well, it depends. If Bitcoin crashes, probably down like $7 or so. Right now, in the short term, probably closer to like $10, $11. Let's see. Hey, Gold 8K, Bitcoin going down. Just technicals, and there probably is some bad news around crypto right now, but I don't know what it is. I haven't done any research on it today. I've been busy, frankly. But go over to digital asset news. I think he talked about it today in his video. I didn't get a chance to watch it just yet. But digital asset news, Rob talks about why he thinks Bitcoin's going down, say from a news and regulatory standpoint, and not a technical standpoint. I'm more of the technical guy. He'll probably have a good idea, and I'll look at this video later on so I can answer your question a little bit better tomorrow. From my perspective, we broke down. We were testing on the 50. I thought since we broke down, we were going to have a hard crash below the 50. That's what happened. But that was a technical aspect, not much more of the news aspect that might have caused us to break down in the first place, right? SoFi has been getting wrecked lately. I've been wanting to buy for a while, but I haven't yet. This is the best time to buy for the long term. Projected high is about $21. SoFi, let's see. And hey, Rom, yes, definitely. Last year, this time of month, it was freaking crazy. There was so many people looking for Dogecoin and things of that nature. Uh, but Dogecoin made me good money, so I'm happy I sold half of it at 50 cents. Okay, as far as SoFi is concerned, it's kind of in a weird spot where I think it's actually going to continue falling down here even more. It did have good earnings over here, but it barely gave it a little bit of a boost. What I'd be looking for as far as SoFi is to slowly nibble in, kind of like what I'm looking at as Robinhood, because I have been nibbling into this for a while now, like ever since it was back over here at $13, and I'm still buying this over time. Retirement play, not short-term play here though. But yeah, so what I'm looking for it now is probably for this to come back into the $6 range over the next few weeks, and that's why I'm probably going to take my next nibble of it and add it to my long-term portfolio here. But this is something it just has not been performing as well as we wanted to. It has been getting wrecked. In my positions I've been buying around here, like well, hold on, yeah, like around here, they're down like 50%. Now, of course, I didn't really buy much of it, but still, it's still been getting wrecked here over time. And with the way the economy is going, it's not going to really get much better here. And I think part of that is SoFi has a problem when it comes to like, let me see if I can pull up their web page. Okay, hold on. Problem at SoFi is they have all this banking stuff, they have all this crypto stuff, But I don't think many people actually use this stuff. Really, I know they have a bunch of posts, but I don't think many people use them. Like, I'm not going to get a home loan through SoFi. I just, for some reason, my mind, it doesn't think like, wow, let's get a home loan from SoFi. My thing is like, let's go get a home loan from, I don't know, Chase or not Wells Fargo, but Chase or or Bank of America, something like that, more traditional. My mind just kind of irks that, like, it ticks that way, right? Checking and savings, get 1.25 APY and no account fees. Voyager is paying 9% to just hold cash in there. 9%. I don't care about their savings account. Student loan refinancing, no. For all I know, well, I've paid off my student loans, but the government's going to give me free student loan debt if I was a person. Why would I be doing that, right? Personal loans, who wants a personal loan right now in this economy? Nobody. Invest, yeah, sure, we can invest. That's probably what most people are doing right now, investing. Credit card, I mean, I earn way more than 2% cash back and rewards for mine. Like 5% cash back, right? So, it's okay. It's okay. Private student loans, sure, but I mean, you're talking about parents that are doing these loans for their kids, right? They're most likely going to go towards a bank, the institution they already bank at. Insurance, auto, life, home, and renters, Progressive would beat the crap out of this, Geico, whatever. Credit score and budgeting, I mean, everybody uses the free stuff from, what's that company? Experian. I see the commercials all the time. Experian. Everybody uses like free, or my bank Chase just started giving me my credit score a while ago too, so I don't have to even do all that type of stuff. They give it to me for free. And auto loan refinancing. Who's buying a car in this market? I mean, people are, but everything's inflated. So like everything that they do is just kind of getting hit. And of course, investing, people are so excited about investing, but there's not nearly as many people investing right now as there was before. And they have to short all this information because they're a publicly traded company. So what I would do for you actually is, if you had the time for it, you go over here to SoFi. Okay. You go over here to the website. Oh, I don't know why I just left the website. Just come back to the website. But we go all the way down here. If I can find it here. Investors. And you see if you can read the 10K that should have come out last year. Webcast. Q4 earnings presentation. No. Okay, 10K right here. Then take a peek into this one right here. It's going to be very boring, but just give it, like, this is, I don't know how many pages, 230 pages. You're not going to read all this, okay? But what you'd want to see here is you go to the table of contents, unresolved staff comments, risk factors, properties, legal proceedings, mine safety disclosure. Maybe look at legal proceedings just to see what they say about that, because they put this into their own words. It's not the annual report that's kind of more for general. This is a way for them to tell their own story in the 10K. Disclosures about market risk, financial statements, okay. Changes and disagreements with accounts and accounting and financial, okay, sweet, okay. No. Corporate governance, part 3, item 10. That's something you might want to look at as well. Let's see, exhibits, financial statement schedules, and maybe the summary at the very end. So if I wanted to come all the way down here, the summary. Oh, none. Okay, well that's good, I guess. But yeah, so you would have a way to see all this information here. Student loans, 2021, $1.6 billion in student loans, cash 15,000, repurchase liabilities recognized 300, total consideration like 1.6, yeah. So gains from loan sales 56,000. That 2021, that's 56,000. 2020 it was 118,000. 2019 there was 30,000. So you saw massive growth in 2020, but you see everything is kind of coming down just a little bit. A lot of stuff is. But unpaid principal balance and accrued interest and loans sold, that's been going up. So they've been paying out more interest, but at the same time they're getting less revenue from other sources. So there's kind of a problem there, right? And the longer you spend on this, the more you can kind of read those details. Learning how to read a 10K is probably crucial if you guys do want to buy something for the long term. I do it all the time. It's draining, but it's not something you have to read the whole thing. It's something you can kind of skim on, and if something kind of piques your interest, like, okay, what's going on here? What's going on there? You're looking for the bad stuff and the really good stuff. That's pretty much what you're doing. And you're trying to see, is there a way for them to change stuff around? Is it worth your long-term holdings? Because I was okay at buying at $13 because I think in the future it'll probably go to like $50, $60. So like really long-term, it'll be fantastic. But in the short term here, it's having issues. And you can read about those issues in the 10K and see, hey, maybe it's better if I just nibble in every few months and just see what I can do. Maybe it's better if I just nibble in every week. You can kind of make that determination after reading some of these informations here. write-offs charged against allowance, provision for credit losses, write-offs charged against allowance, provision, all types of really boring stuff here. Investments they have, asset-backed bonds, personal loans, carrying value 2.2 billion. Student loans 3.4 billion. Total, I think that's 3.4 billion. Yeah, 3,450,837,000. I think, or maybe it's 3,450,837. One of those two. Sometimes they make the numbers different, but I could always check it out if I just ask them. And if you ever have any questions on the 10K form, you can literally just email their investors department. They'll get back to you within a few days with a specific answer. They're really good at answering specifics. But of course, that's a lot of work on your part. But definitely worth looking at the 10K forms. Definitely worth looking at the 10K forms. But you can just see, looking from that, like this little peek that we did, there was a lot of information we talked about, but it didn't even scrape the surface of how much information is in that 10K report. They go so in depth, so freaking in depth into those things. Hey, dude, debating if I should start nibbling in right now. I mean, you can if you want to, but it might probably only be a short term return here. What I would say here is, if you're going to be nibbling into something right now, Bitcoin has support around 38,898. What is that from, actually? No, I mean, it, no. I would probably use the 38,825 as a stop loss for you, because that's where the Fibonacci level is. That might give you a little bit of comfort there. And if you bought right now and you start nibbling in, that'd be about a 2% loss, not even. So that might be the safety net. So you might be making 2 to 3%, risking about 2% or so. So you got to be careful with that risk there. But if you want to do a little bit more of a day trade, you can definitely try to buy some in here. If you're nibbling, just make sure you're going to be holding it for the long term if you do start nibbling right now. And I have nibbles right now that I'm still holding for the long term as well. Just understand, like, if usually when you're nibbling like in these types of zones where it might come down even more, it's best to have them on a separate portfolio so you don't have to look at red on your charts all day long. Because looking at tons of red can be very very, very demoralizing. Let's see. Let's see. Check your overlays for Streamlabs. Your name still here is on the thing. Where is that at? Oh, probably somewhere where I just hold on. Hmm. Oh, I see it right there, that little thing. Yeah, thanks. Appreciate it. Boom. There you go. Thought I deleted all of that type of crap. So $6 range for SoFi. Yeah, what do you call? I would really like start loading up on that slowly. But yeah, definitely read that 10K report or skim it. It shows you so much information, and it'll be good practice. You guys should really read 10K reports. Very, very boring, but it's good that you start understanding some lingo. So if you're ever watching CNBC or like Fox Business personally, um, they will help you kind of understand some of the lingo when they have their guests on who work for hedge funds and banks. They'll kind of be talking in those same terms. So when you get a gist of how to understand those terms, it really does open your eyes to what they're exactly talking about. Because a lot of investors that just watch CNBC or Fox Business, they kind of hear some words, but they don't know exactly what they're talking about, like quantitative easing and all that good stuff, right? Which is a fancy word of like easing the balance sheet. Okay, there we go. Hey, Brian. Okay, I'm gonna head off. I was actually planning to only stream for like an hour today, but it ended up being like an hour and 40 minutes or so. Right now, we do see Bitcoin consolidating a little bit more, not falling as drastically. We already broke out above the 20 for the first time, and since yesterday here. So it might be a good buying opportunity if you guys want to do a short-term little bounce play here. Just a short-term bounce. That's mostly what you'd be looking at here, a short-term bounce. But there is profit to be made if you wanted to trade this here going forward. But I will see you guys tomorrow back at the normal time of 6 p.m. I am most likely going to take Wednesday off to just relax and kind of recuperate. It's been a long few weeks here as I've been kind of battling to get my YouTube channel remonetized. And I do want to say thank you before I head off tonight, guys. You guys retweeting and helping me out, and all the other YouTubers that helped me out as well. I really do appreciate it. It was so hard to get my channel remonetized, And and remember, I was told it was a mistake, and so I accepted it was a mistake. I'm glad they fixed it back up here. But now now everything's kind of going back to normal here as far as the channel is concerned, and I'm gonna start pumping out content. I am gonna be putting out like 5 or 6 short videos a day, which means like shorts content, which like I explain a specific breakdown or breakout that I'm seeing. Watch those shorts. I'll give you guys some information of like what I'm seeing in the marketplace for particular stocks, whether it's Tesla, Microsoft, Apple, whatever it is, you know, any stock. If I see something cool happening with it, I will make a short video talking about it, and you guys can do some technical analysis on your own to kind of figure out the rest of the story here. But it'll give you a gist of what to look for. Okay. So if you guys go on my main channel right now, you see a whole bunch of shorts there. You don't have to watch them right now, but you should start seeing them more and more often kind of popping up. So give them a shot if you want to look at some random coins or stocks and see what my impressions about them are. Okay. All right, everybody.